Hello everyone, welcome in a new daily live stream brought to you by the market research team at OnePro. This is Mohanad Yaoud, and today we're going to have a look on the markets real quick. So basically, it's the beginning of a new trading week. We're having some bad news from the Chinese economy relating to the real estate sector, which we had previously some crisis in regarding the debt crisis and so on. So we are having another similar to Evergrande scenario happening again with another uh, real estate giant. We need to discuss this in more details. Why the major US and the global indices are basically trading down today. Even the futures for the US indices are in the negative territory. How will this affect the markets? What do we have on our economic agenda for today? And what do we expect as per the technical analysis? All of this will be discussed in today's live session. So please get ready with your questions. If you have any questions, please let me know in the comment section below. If you are tuning on YouTube, and I'll make sure that by the end of this session, we will get all of your questions answered today. So thank you very much, and please let's join this live session right now. Welcome back, everyone. And starting with the economic agenda for today, it's the beginning of a new trading week. Although we have some news, as we agreed, bad news from the Chinese economy. However, on the economic agenda side, I can see that there is nothing really much interesting here today. The only thing that we will be looking for should be the consumer inflation expectations that would be released today. And this is, let me be honest with you, it's not something that would drive major volatility or cause major volatility during the day. We have the GDP from the Japanese economy. However, this will be by the beginning of tomorrow's Asian session. Let me share a quick update with you regarding the Japanese yen and the Bank of Japan. And we will see this more when we dive onto the charts with the dollar versus the Japanese yen, and even with all of the currencies against the Japanese yen. The Japanese yen has been weakening a lot during the past periods, and this has been noticed by everyone watching the markets. However, the thing to notice here is that the Japanese yen has already weakened to the level which previously the Bank of Japan decided to interfere in the markets and boost or try to support the Japanese yen. And we'll see those exact levels on the charts. So be aware that during this week, we might see, we can expect that the Bank of England might interfere again in the markets. So if you're thinking to sell the Japanese yen or apparently buy any currency against the Japanese yen, like the dollar yen, pound yen, or any other major yen pair, please make sure that selling the Japanese yen is something that you shouldn't do during this week, at least be on the safe side. So today, as we agreed, we are just looking for the consumer inflation expectations as well as the GDP from the Japanese economy. We had some data by the beginning of the European session today, and it's basically the German wholesale price index, and it didn't really affect the markets. It's still in the range which was previously reported, roughly, not a major change, although expectations was a little bit different. However, the readings came just around the previous reading, and that's all that we need to discuss on the economic agenda. Nothing much, nothing to expect, only the consumer inflation expectations that I'll only be looking for during today's sessions. Let's have a quick look on the technical analysis, or basically not a quick look. Let's have a dive deep into the technical analysis on the charts and see what are the major levels of support and resistance and what do we expect on the charts. Okay, starting by the dollar index here. And on the daily time frame, we can see that the dollar is still trading well within the price channel that we have been trading in for quite some time now, since basically March of 2023. We are still edging lower, although the move to the downside, yes, this is a downtrend, okay? Let's be honest. But it's a very weak downtrend here because the highs and lows are slightly lower than the previous one. So it's a downtrend, but a very weak downtrend here, guys. And on the short term, although we do expect that the dollar will reach levels of 103.57, we don't really believe that this will happen today. Why is that? Simply because on the 1 hour time frame, we have just broken above a major resistance level, which is 102.85. And if you want to know whether this break above was basically a confirmed break above or just a false breakout, you should always look for momentum. The momentum here says it's a bearish divergence. So if you're having a bearish divergence where the price is showing you higher highs and higher lows, however, the momentum on the indicator is showing you lower highs, you definitely know it's a bearish divergence, and you should know that this upward move was just nothing more than a false breakout. So we are expecting today that as long as we are trading below the high, which was registered, not this one, sorry. As long as we are trading below the high, which was registered around 103, we are definitely expecting a downward move on the dollar to target the previous low around 102.40. So we are currently trading around 102.85, 102.40 is our target. So we are looking for a 45 pip move to the downside, and that's on the dollar index. Let's have another look, however, on the opposite side, which is the euro versus the dollar. On the other hand, the euro is trading still within the price channel, the upward price channel here that we are having. Yes, although on the medium term, we expect the euro to target the 1.0853. However, this is not something that we can see today. We don't expect to see this downward move today. Today is another bullish divergence here forming on the euro versus the US dollar. We can see it's a clear sideways range. You can see here prices are moving lower, lower lows. However, momentum is slowly edging higher. So if momentum is edging higher and you're already near the support level, the key support level, which is 1.0930, we do expect to move higher on the euro versus the dollar. So that's what we expect on the euro versus the dollar. So another move that we expect lower on the dollar basically has the opposite expectation on the euro versus the dollar, which is an upward move from the levels of support, supported by bullish divergence here. What's happening on the pound? It's pretty much similar on the hourly time frame, because basically we do this live session daily, okay? So we try, yeah, although we always talk about the long-term expectation and the medium-term expectation. However, I know that our traders want to trade now. They want to know what's happening right now in the markets. So you can quickly see on the 1 hour time frame, it's a support here. Prices are starting to move higher, and you already have this bullish divergence here. And as we know, as we always agree in our live session, is that the pound is a little bit ahead of the euro. So if the euro still didn't show enough bullish price action, the pound is already moving higher, which is pretty much, to me, confirms the move that we are expecting on the euro. So for the pound, currently 1.27, I expect it to go as high as 1.2730 during the European session. So we are looking for a 30 pips move, pretty much highly probable on the pound versus the dollar. And let's talk a lot about the dollar versus the Japanese yen, the dollar versus the Japanese yen is trading right now just below the levels of 145. Okay, 145 levels, if you see them on the daily time frame, the last time we reached those levels was basically in June 2023, and we immediately lost around 800 pips in 10 days. So it was a major resistance level. I don't really expect that we will be moving any higher than 145, even though we might see a full breakout. However, we wouldn't really stay above the 145 levels. Another thing to notice is the level that we saw Bank of Japan interfere in the markets at, which was 146.40. This is the level. And you can see that the Japanese yen gained around 2,000 pips in 50 days, supported by the interference by Bank of Japan. So technically speaking, we are in a resistance level, and from the economic side, the Bank of Japan might re-interfere in markets because we are trading near levels they are not so happy with. And that's for the dollar yen. It's a definite short for me on the short and the medium term. You can see as well what's happening here on the pound versus the Japanese yen. This is a major resistance level back at December of 2015, more than just around 6,000 pips of a downward move, and this is the first retest for this level here. So the pound versus the Japanese yen is already losing momentum on the weekly time frame. On the daily time frame, we are already having a bearish divergence, and I can guarantee this is also happening on the lower time frames. And yes, we are having another bearish divergence. So guys, the yen pairs are to be shorted during this week, and we will look for not extra confirmation, but for people who doesn't want to take risks, all you need to do is just to wait for a break below this consolidation or the sideways pattern here. So it's a sideways move. A break below 183.30 will definitely push prices lower and give the Japanese yen more strength. I'm pretty sure this is also happening on the Canadian versus the Japanese yen. So all of the yen pairs, you will see this pattern because they are affected by the weakness that has been taking place on the Japanese yen. Gold is basically, it's moving to the downside, but another very weak downtrend here. Very, very weak downtrend. You can see how many times there are corrections inside this. So basically, to me, any downward move on gold is something to utilize in a long trade. To me, the levels of 1907 are the key levels of support. We might retreat a little bit. However, any downward move on gold is a good opportunity to go long on the short and medium term. And finally, ending our live session quickly with the US crude oil. Basically, we had an upward move. We are retesting the levels of 82.40, which we mentioned before. I believe there should be a bearish divergence here. So this is a break above a key level. Okay, here you go. Sorry. However, the overall price action is weakening here. You can see how many corrections, okay? And you can see here another bearish divergence. So is this breakout really something that you can go long after? Or should we wait for another break below to go short? To me, personally, I'll be waiting to go short on the US oil because this is an uptrend I wouldn't risk my money at. So on the short term, basically what I'll be waiting for is to target the levels of 79.90, and a break below should definitely mean more losses to see on the US crude oil. So that was all for today's daily live session. Thank you very much for watching this. Please stay tuned for a daily live analysis session just around the same time, 1 p.m. at Dubai time. Thank you very much for watching, and please stay safe.